Hi, welcome to Connect and Collaborate. I am Alex Hopkins, your on-air producer, and this week we are talking real estate. I am very excited because it is a hot trending topic here in Denver. And so before we introduce our guest, I would like to ask our audience to please be sure to sign up for our newsletter at cobrt.com. Check out our events page while you're there and the radio page while you're there as well. But I have with me in studio Pete Chippitz. He is with CBRE. So how are you, Pete?
Doing great, Alex. Thanks.
Yes. So let's talk a little bit about your background, why you got involved with real estate in the first place, and how long you've been doing it, and when you jumped on board with CBRE.
Yeah, so my role at CBRE is I'm the market leader for Colorado and a couple of other mountain states. I started my career in real estate on the transaction side, focusing on office properties. I was escaping the tax law career I was in before that, which was as interesting as it sounds to me. I was seeking a little more client contact and a little more of the sales. I started my career in at Black & Decker and enjoyed the sales side and jumped into real estate. And it's been all real estate ever since.
Okay, so Black & Decker, that's interesting, because when I think of that, for whatever reason, I think of Sky Mall magazine, and I guess I didn't.
I was an industrial power tool salesman. Don't I look like that?
Yeah, yeah. That's and tax law behind you. All right.
Yeah, exactly. Industrial power tools, tax law, real estate. It's linear.
Clearly, yes. All one big trend there for you.
Sure.
So let's talk a little bit about CBRE and their background. And we talked before we got on air, so CBRE is literally just CBRE. It's not an acronym. There's no...
No, it's not. Okay. We're a global company, want to make it easy for people all over the world to recognize us.
Yeah.
Over 80,000 employees spanning the globe, covering pretty much everything in commercial real estate or real estate in general other than single-family homes. So on the residential side, we do multifamily sales, we do facility management, we do industrial valuations, mortgage brokerage, pretty much anything you can think of tied to real estate.
Wow, okay, so that's a lot to offer. And you do the marketing.
I oversee the region, so from a geographic standpoint, we have a little over 1,000 employees in Colorado. All of those business lines roll up to me. So I don't do anything on the transaction side. We try to keep the boat floating and point it in the right direction.
All right. So how do you go about doing that? Do you mind walking me through what a day is like with you?
Well, because of the diversity, I think, of our business lines and such, it's no day's the same, which is a good thing.
Yeah.
And so some days we're doing this. We're doing more public outreach, and other days we're strategizing as to how to keep market share or grow market share and kind of what's the newest in the business. I think one of the fundamental things that's happened over the years is we've deviated from being a brick and mortar real estate company. We used to be very transaction based probably as a whole industry, if you will. And what we've noticed over the last 10, 15 years is clients are looking for more information. So I actually consider us more an information company. They want data, they want understanding of not kind of what has happened, but what to prepare for going forward. So we spend a lot of time thinking about the future, if you will.
Yeah, well, I appreciate that. But before we get into the future, let's talk a little bit about the current market. It's hot right now, especially in Denver, right?
Yes, it is.
Yeah,
we've been on a tear.
Yeah. Tell me what you got for me.
Well, one of the stats that sticks out to me, we won't do a lot of stats, but like our industrial space is incredibly active. We've had 32 consecutive quarters of positive absorption, and positive absorption just means there's more space being utilized than there was in the prior quarter. And so 32 consecutive quarters is pretty much unheard of for us. And there's a lot deeper dive on that industrial and why that's so hot, but that's one of the examples of just how active we've been here. But pretty much every sector, multifamily, everyone sees that. The majority of the cranes on the skyline are tied to new apartment buildings and condo projects and things like that. And so that's been very active. Retail's actually been active. That's a really interesting topic, the clicks to bricks kind of phenomenon. A lot of changes as it relates to how people are buying goods, and that impacts real estate a lot.
Yeah, absolutely. So I would imagine, being in the commercial realm here, you've got a lot of retail industries and other industries that are moving to Colorado, right? We've been growing for a while, but I understand that we probably have a lot of industries and startups, right? Do you deal with a lot of startups, or are you more with established companies?
Across the board.
Okay.
We deal with both. I mean, we have Fortune 500 companies. The majority of them work with us, but also, some of the most interesting real estate is done by those early companies that are forging their way. Retail, for example, when I mentioned Clicks to Bricks, this e-commerce phenomenon is, we sort of joke industrial is the new retail, and that's just because people need so much more industrial utilization in the supply chain in order to get their products, because they're not necessarily walking into stores to do it. A couple of examples, Warby Parker and Bonobos are two new entrants to the market that kind of solidify us as being a market that the top retailers in the country want to be in. They want to have a brick and mortar store, but it also is signifying that our people here, because oftentimes you'll buy products online and then you might go in and have an interface in the store as well. They want to have both. Unless you're a major market, you're not getting the brick and mortar. And so Denver's kind of evolved into now moving up into that first tier, and we're getting some of those brands that you normally wouldn't have seen before.
Yeah, that's
so exciting. It is.
For sure. So what has been your favorite growth that you've seen so far?
I don't know if there's a favorite. Again, we don't get to play favorites. We've got to play across the board. But it's been nice that it's been balanced.
Okay.
And it's been somewhat measured probably everywhere other than multifamily. We've had a lot of people move to the metro area, as evidenced by the commute it took to get here. So we've all noticed that, and that has created a significant need in additional housing. And so there's been a boom on that standpoint. But other than that, it's just been a great cycle where I look at it and say we may have had our peak in the end of 2016 in terms of one of the metrics is sales volume, the total amount of product that's sold. And so we've had 6 quarters since what may be our peak. And the last cycle, 6 quarters after that, we had all negative growth. We had devaluation. We were in a pretty rough spot across all of our major 4 asset classes: multifamily, retail, industrial, and office. Whereas this cycle, we're 6 quarters after that peak, and we have continued to see growth in property valuations throughout. And so it's just it's a much more measured growth pattern and pace for this cycle than it was in the prior. So that's good for most people.
Yeah. Well, do you have any predictions here for the future and how it's going to go? Obviously, we saw that their legislation was looking at, I believe it was Senate Bill 66, talking about putting a cap on growth, but that did not go through, thankfully. I think a lot of people were pretty happy about not seeing the cap on growth go through. It's big for a lot of industries, including your own, I'm sure.
I don't think you can fight progress, or you certainly don't want to be known as a place that does that. People want to move here, people, businesses, for all the reasons that we're here. And so to me, it's sort of un-American to want to fight that. We're sort of an open border place, and you move to the places that are most attractive. And we've got a lot of really attractive attributes about being here. Very educated workforce. Obviously, you've got the great outdoors. You've got a strong company base in terms of employers that's much more diversified now than it was in prior years. And so all of those things just make for a more interesting city, if you will. And that's, I think, what's really fun to see is that people are moving here now, not just for the outdoors, but they're moving here, because the city itself is a leader in, the restaurant scene, the microbrewery scene, and some of those things. So it's attractive for a lot of reasons. It
is attractive for a lot of reasons, and I'm going to go ahead and say it. One of those reasons is marijuana, right? We're one of the few states that has legalized it. So I'd like to see what your thoughts are. I know that not every business is comfortable with dealing with the marijuana industry, right? Banks won't get involved at all with any of the marijuana industry. But real estate is kind of a big market for them. They have to have a place to go, right?
Yeah, it's it's an interesting topic because it is, I guess, controversial. It's become less so, if you will, because while we were the first, now others have followed, and the medical marijuana industry, if you will, has grown as well. So a lot of states now, have some form or fashion of the marijuana industry. But being the first, we certainly kind of forged the road as to what its impact would be. And honestly, it had a really positive impact, specifically on the industrial side of things for us, because the cultivators, the grow operations, if you will, back in right as the kind of cycle was at its trough, at the lowest point, this is when this industry sort of kick-started, and it took a lot of the low-quality assets off the market, the kind of Class C assets, if you will, the stuff that is last to lease or last to sell in a cycle, and it took it off the table early on, and ended up occupying in a fairly short, over a handful of years, it grew from 0% to 3% of our total stock. And so 3% is not a huge amount, but when it's taking the lowest quality stock off the market, that had a really beneficial impact on the whole industry. So,
what do you mean by lowest quality stock?
The type of industrial product that is antiquated from how we use the industrial product now. We need to have taller ceilings and such because you're stacking more product the way that the distribution is, and this was a much lower ceiling, which was a good thing for the marijuana industry. Yeah. And so I guess I would just use the word antiquated from an industrial standpoint. And so as opposed to those types of groups getting very, very aggressive on pricing and kind of driving down the overall industrial space health of the market, they actually had the opposite. They had a fairly significant amount of demand placed on it, and it took that phenomenon away, and I think that's what's allowed us to grow even faster in this cycle.
Yeah. All right. So I know that you have a little bit of data about the marijuana industry, but I want to reiterate for our listeners, it is from 2016. Mm-hmm. So it is a little bit dated, but I still feel like it's worth mentioning some of these facts that you guys came across in your...
Yeah, part of the reason we've stopped focusing on it is because it's somewhat hit the maturity from an industry standpoint. And in late 16, it hit kind of right about that 3% of total stock, a little over 4 million feet of total operations. We also had another phenomenon where we had some additional laws passed. The city council passed legislation in 2016 that capped the number of operations and really limited the growth, which was somewhat fine from our perspective. Sort of the impact on the industry had happened already. And so, looking at it as 3%, like I said before, doesn't sound like that much, but when you turn it into square footage, it's 4.2 million square feet. That's a lot of space that, this niche in the industry occupies, mostly warehouse space.
Yeah, I had no idea. 4.2 million square feet, that's a lot, but only 3% within the industry. And again, I know this is from 2016, and I certainly don't want to put you into a position where you don't feel comfortable, but what do you think this is going to get any bigger? You mentioned that you think it hit its growth mark, right? Its peak?
Yeah, I mean, only 3.1% of the land in Denver County is zoned, for marijuana cultivation. So there are other limiting factors that we really don't see it growing, at least up here in Denver. You might see growth in some other areas. I mean, we've certainly seen larger operations move to different parts of the state and such, but I don't think we're going to see much more impact here. Again, with the other limitations on number of retail outlets and stuff, I think we're pretty stable.
Okay, right on. Let's talk a little bit about affordable housing.
Yes, hot topic.
Yes, very hot topic. I am a millennial, so I am in that boat of, I live in a basement of a friend's house right now, and it's really tough to find a house that I can afford, right? Yep. I make a decent amount of money, but my goodness, I can't afford a $500,000 home.
No, and like I said, is almost all the other asset classes had a more measured growth rate, but because of how many people moved here, there's been just a lot of pressure put on. It's basic supply and demand, if you will, and so what will help that is to continue to see those cranes in the skyline building additional supply. Okay. A lot of people in our industry talk about, are we oversupplying, apartment buildings, and no. I mean, there's just a pretty simple response from us is we're not, because if we still want to be an attractive place to live, to relocate to, we have to have affordability, and we have to catch back up on our supply of product in order to allow a little bit more relief in that area and to stop the year-over-year appreciation of rent. Sometimes you want to see that, but to be year-over-year on the top of that list is tough. The good news is we're actually, when you compare ourselves like to the top 20 markets in the country, we're dead smack in the middle, and we're actually below the average, if you will, of the impact of our rents in comparison to wages and such in the city. So, the median income is what we kind of look at, and we're lower. What's changed is we moved up that list quickly, and so we haven't had a lot of time to adjust to it.
Okay, so do you think we'll adjust to that eventually?
Yeah, I mean, I don't know many great cities who are inexpensive. I mean, the best places from a city standpoint in the world tend to be pretty expensive because there's a lot of opportunity there. And so people are moving there not just to pay higher rent, they're moving there because there's more opportunity. And what goes hand in hand, in my opinion, with the raising or the rise in rents is the fact that we've become more diversified. We're a more stable place to find work. And so the good news is once you get here and once you get settled and you figure your way around, you're probably going to find more opportunity than some of those lower cost cities. They're lower cost for a reason.
Yeah. Any advice for someone like myself who's on the market? I know you don't do a whole lot you don't do single family homes, but do you have any advice for someone like me?
I think patience, like see how long you can hold your breath. No, we have a good amount of supply coming to the market. And so, for better or for worse, we have seen a little bit of a decline in how quickly people are relocating here. We're still positive. Yeah. And we're getting we're keeping our rank. We're the second highest state for education in terms of percentage of population with a bachelor's degree. And, we're the only state that's not on the Atlantic that's even on that list from a top 5 standpoint. And so we're sort of the smartest of the West, if you will. And those are good things. Those are going to create better jobs. And so we need to build. And if you're patient enough, I think the supply that we have coming is going to provide some relief. It's at least going to slow the pace, because I think that's what's been frustrating to people is they've said, well, I'm going to wait a little bit, and then all of a sudden, it was even more expensive than you thought, waiting a month and 2 months and 3 months. And some of that I think will ease.
Yeah, I believe so as well. And I will try to keep patient. Definitely not going to hold my breath, but I will keep patient, and I appreciate that advice. Can we talk a little bit about transportation and its effect on the real estate market?
Absolutely.
Yeah.
It's interesting if you look at, and you don't need to go to any specific stat, but a lot of times people say you've got to be those cities that have, the best mass transit, and we've invested wisely in that. We have, having train transportation between downtown and the airport is key. It allows, the mobility of people in and out for not just, domestic travel here or the people that live here, but it allows business travel to be more efficient and such. But we're seeing a significant shift in what types of transportation is important to people. And, the Uber phenomenon and Lyft phenomenon, if you will, is changing how people interact with real estate. And so, our head of research was just out talking about how, in his opinion, you're going to see larger, whether it's office buildings or residential buildings and such, turn more into that big hotel interface where you've got these large pickup and drop-off areas because people are using, they're not parking their car in their own space in their building and getting out. They're using rideshare services and such. So it is going to have an impact as to how we build our the new developments, if you will. The good news is on that is, by and large, what we're replacing are surface parking lots, which is about the worst use of real estate, in our opinion, in a city.
Really?
Yeah, it kills walkability, from it in terms of there's no density. What makes great cities is to have somewhat of a dense population. It allows for more creative retail use and stuff. So we kind of say build up, not out. If we want to be a great city, that's what we have to look like. We have to have taller buildings, not preserve mountain views for second and third floor, buildings. You've got to build up. And that's going to allow for more and better retail. It's going to allow for density that creates just a more interesting environment. So we think that people not using surface parking lots or not having the need for surface parking lots because of rideshare and such is going to improve the city, as well as have an impact on the design of the buildings that are built.
Interesting. And I wrote down that you said invested wisely in our transportation because I feel like a lot of people would disagree with you. We're in a lot of people are up in arms right now. Should we spend more money on fixing the interstate? Should we spend more money on public transportation? And one of the things that I realized when I first moved to Colorado about 8 years ago is that you had to have a car here, right? Mm-hmm. And we're definitely trying. I will give you that. And I think you're right, with the train from downtown to the airport was key. That was mm-hmm. huge for a lot of people that have moved here, and again, business travelers coming to visit. So I guess I feel weird about taking away the parking lots. Mm-hmm. So that was...
We're not taking away parking, we're taking away parking lots.
Yeah.
People that have the desire for a car are still going to have space for a car. There's not any city, in the world that you can't have a car if you want it. What it does is it becomes a little more pricey to have your own car sitting, because the stats are pretty astounding. Is people's cars are sitting somewhere in the mid to upper 90% of the time, and so that's just not a highest and best use of a specific vehicle. Doesn't mean you should or shouldn't have one,
right?
But there's a cost associated with that, and if your primary activities are in and around the city, I would argue you don't need a car anymore. Mm-hmm. We've got pretty good light rail and train access and such. We certainly have good bus rapid transit if you're going to places like Boulder, and the Mustang has grown in popularity throughout the Front Range and such. So there are alternatives, at least, to mm-hmm. people who don't choose to have a car. And then you're seeing the car sharing, the car to go and those kind of things gain in popularity as well. Certainly if you want to go camping, it's a long walk or, a short drive. So you better have a car or know somebody that does if you're going to do that. But I don't think there's really any way until we start talking about drones that you're going to go camping without a vehicle. So I agree with you on that front.
Okay. Yeah. I guess I never considered it from a real estate standpoint, that the transportation side of things is pretty okay right now. Obviously, we would all like to see a little bit of growth in that.
Yeah, 100%. And, when you have as many people move here, you have 250,000 people move here, like that has an impact on the infrastructure. And roads take so long to build, you can't build that fast enough. Mm-hmm. Or you certainly can't do it without it creating more of a cost. And so, that's the question, is what do you invest those dollars in? And then what are we going to look like in 10 years by the time major infrastructure would be done? Will we actually need that, that additional capacity, or will we be car sharing and have less cars on the road and things like that, or autonomous cars, those kind of things?
Awesome. So let me ask you real quick, Pete, what is your main people that your clientele, actually? Who are you reaching out to personally?
I would say our clientele, like I said, anyone who's interested in real estate, we are interested in partnering with them on their projects. It's not just a transaction-based group. In fact, half of our business now is what we would consider, contractual based, where we're doing facility management, we're doing valuation work, we're doing property management work, those kind of things. So we try to basically offload the need to have in-house real estate expertise, because this is the only thing that we do all day, every day, across the globe. So we think we're pretty good at it. And that's what I would say is if you have an interest in commercial real estate, we probably have a service for you.
And where can they find that service?
Easiest way would be to go to cbre.us/Colorado, and you can find my information there as well as all the other business lines and such that we offer.
Thank you so much, Pete. This has been eye-opening, and I really appreciate you coming in to talk commercial real estate with me.
Thank you much, Alex.
Yes,
appreciate it.
Absolutely. And again, visit cbre.us/Colorado. You can find Pete's information there. If you have any interest in commercial real estate, you can find that there as well. And be sure to check out this podcast and more at cobrt.com/radio-podcast. And be sure to like and subscribe our YouTube page while you're here. Thank you so much. It has been a pleasure, Pete, having you on.
Pleasure as well. Thanks.
Thank you.